What is up, everyone? Welcome back to the channel. In this video, we are going to be talking about ticker Google. Everybody knows Google and why I think we might have a potential top in for this run, particularly. And we're going to go into the chart to see why the chart supports that. All right, guys, let's get to it. Okay, here we are in the daily chart with Google, guys. Obviously, extremely strong stock, $4.2 trillion market cap, and Google will inevitably make more all-time highs, guys. But I think we have a potential to see the top right now for this particular run. And just a quick note, guys, because you could be trading Google ticker GOOG or the one with the L. It is virtually the same stock, guys. One of them is a Class A, one of them is a Class 3. The Class A, you can vote as a shareholder, and the Class C, you cannot. That is the ultimate difference between them. They trade in less than 1% of the price. The chart structure is virtually identical, guys, but that's just a quick note in case you were wondering. So before I get into the chart, guys, I just want to note that we have earnings for Google tomorrow on the 29th. Today's the 28th. And my point is I don't want you to be emotionally invested in earnings or the news, guys, because you could see last time we beat earnings here. And when I dive deep into this, you could see that just because we beat earnings doesn't mean the stock's going to go up and vice versa. Same thing with the news, guys. The news will tell you one thing and the chart will react, and you'll think it's because of that. Do not get emotionally invested in the news or earnings because it is all about chart structure. And you could see here, like I said before, the earnings was beat. Very good earnings, right, guys? Right here, we pushed to the top. And on that same day, we closed out minus 11%, even though they beat earnings, guys. So, riddle me that. And, another good example is Intel. We had earnings the other day and it had a huge spike, but we had this gap in the weekly chart. You know what I say about weekly gaps, guys? They are inevitably closed, especially for these large cap stocks. And this one was from 2000, guys, 26 years, and earnings spiked. I'm not saying Intel's a bad company. Intel's a great company, obviously, but some of the purpose of this move and the earnings was to close this gap. So treat earnings as a excuse for volatility. That's the way I like to look at it, guys. Especially in smaller cap stocks, they can have earnings and they could drop 30% or increase 30%. So Tesla's a good example of that. If you look at their earnings, treat earnings as an excuse of volatility. Do not think just because they beat or fail to meet earnings that means the stock's going to go up and down respectively. It's more about chart structure. You could see the last time we had earnings here, we were forming a bearish divergence. The price was getting higher. The RSI was weakening. So that chart structure indicated, a downside move, and earnings, even though we beat earnings, the downside move followed the chart structure. And it looks like we are developing the same thing here. So pay attention, guys, because we got the higher high, but the lower high on the RSI. So we got gaps to the downside. So pay attention to earnings. I'm not saying that means we can go straight up or down, but you got the point. Let's get into the chart, guys. I'm going to turn this off and the drawings on. We're going to go to the weekly chart. And you could see we have a lot of prices here. I'm going to turn the volume off. We have a lot of zones here, guys, and the zones are tighter than usual for Google because, we had this huge uptrend since last year in April. We were in a mega uptrend, 145%. That's great for a stock of this magnitude, guys. And you could see Google did not hang around these zones long. So that's why these zones are tighter than usual. There wasn't a lot of consolidation. It was just a very strong uptrend. So let's go prices to the upside real quick, guys. As I said before, Google will inevitably reach all-time highs, but I do not think these will come right now, according to the chart. But if they do, whether we pull back or we go up to these targets now, these are our future targets, guys. About 364 to 376, and our next target zone is 400 to 410. And these are primarily based on Fibonacci retracements, guys. Before I get to the prices to the downside, guys, feel free to subscribe on YouTube, but my premium content is on patreon.com/GainsKeeper Trading. You know what we do. We have a premium vault of tutorials and trading systems. We do small to large cap, swing trades, and breakout stocks, and we go once per week beyond the charts to focus on personal growth and awareness, guys, and we apply that to the trading world as well, and we become better people and better traders at the same time. Check me out, guys, and feel free to subscribe on YouTube if you like the content. Okay, so prices to the downside, guys. Now, so the couple main reasons I think we are going to see these prices to the downside, besides the market being overheated, we have this massive rally in the bull run. We have this, bearish divergence forming, and mainly we have pretty much a perfect double top here. You can see we're already in our top supply zone. We exceeded the core supply zone that we've reached a couple times, and double tops are bearish patterns, and we know this from our other videos, guys. And we are in the weekly chart now, and you can see we may be getting compressed by this weekly RSI as well, and almost getting rejected already. So I think we have at least a few scenarios to the downside. I'm going to turn the indicators off real quick, guys, and we'll get to it and put the gaps on. I'm going to stay in the weekly chart for visual purposes. So all these lines are daily gaps besides this one. Obviously, it's labeled weekly. I'll drop the RSI for now, guys. And we are in the weekly chart. Let's assume this is the top that we reach for this run, guys. Let's do a Fibonacci retracement. We have this early reaction point at 322. That's if we're coming up. You could see multiple touch points here. So that is one of our price goals to the downside with this gap. But if I do this Fibonacci retracement, one of our main targets for the downside, I think we'll at least touch, is this trend pullback zone between 297 and 303.06. And that makes sense because we have our main primary rebalance zone, this golden zone here, guys. That's highly likely to get tested, and our 786 retracement here with this gap. So we would close these gaps and then come back up. That would be a loss of, if we hit this early reaction zone, 8%. And to about 14%, I think this might be the minimum retracement that we have to the down. That makes sense for me with the Fibonacci. Let's see. And yes, and by that time, it's not, obviously this is not going to take 1 or 2 days. Obviously, it takes time to retrace, and by that time, maybe the daily 200 catches up. That provides strong support for us as it has in the past. You could see the support, and the last time we touched it, we gained support in this next zone that I'm going to talk about now. And by the time we catch up, close these gaps, I think this is, and the golden rebalance zone, I think this is definitely one of the retracement levels. Let me delete this Fibonacci retracement, and we'll go to the next one. Go back to the weekly chart, guys. So my main concern with this chart here, guys, to the downside, is this weekly gap. I'll turn the gaps off, and you can see where it is here. And that is a 24% move to the downside. You could say that's a lot, and that's not possible. But look at these last 2 weekly gaps here. You could see this one very, very slim here. This one closed, that was 29%. And from this peak here to close this gap was 30%, guys. And that is about the same range. So it is not far-fetched that this weekly gap will get closed. I know we're very high right now, and you're like, oh, Google's going up, up, up. But, just when you expect that, we have unfinished business to take care of with these weekly gaps particularly. And that's where our double top pattern comes into play. And you've seen my other videos, guys. The double top pattern is from the neckline support. This is a rule of thumb. I think we have 2 potential neckline supports here, guys. That's just the space in between, the low in between the 2 peaks. I think this one could be this I think might have been a fake out. But if this was it, the top was 18%. If we drop down 18%, that would make sense. We would hit our lower demand zone here, close that gap, put the indicators back on, close this gap, and it's on this supportive trend line right here. That's also, it's been rejected in the past, but, when we're trading above it, that provides support. And that would line up nicely here with the bottom of the weekly Ichimoku cloud, which is very strong support as well. That would be a 30% move. But like I said, I showed you before, that is very possible if the market does go bearish eventually. If our neckline support is here, guys, the bottom peak, that would be remember, this is just a rule of thumb as well, 29%. So that would be 29% down from here. And that would be in our bigger correction liquidity zone, guys. That's if the market really goes bearish for a long time. We have the weekly 200 moving average here. That would be a not financial. Remember, none of this is financial advice, guys. Forgot to mention it before, but that would be a big load zone for many people in terms of loading up shares. This is a very low price. It would still be a healthy correction, believe it or not. You could see we would be forming a higher low, another higher low, even though it's a long way down from here. That would be, 40 to 46%. In my opinion, I do not really expect that, but I'm not saying it's out of the picture, guys, because the double top pattern, we got the bearish divergence, and we have this unfinished business with the gap. If this gap gets closed, that'd be very healthy for the chart structure. So just to recap, we have this trend pullback zone, our future targets to the upside. I think likely we come down to one of these three zones first before we hit these targets. That doesn't necessarily have to happen, guys, but in market sentiments like this, you have to be prepared for every type of scenario, guys, and that's why I'm here to provide you. And we have, I didn't mention this intermediate demand zone before, 271 to 281. That is also, you could see we had a nice reaction off that before, and we have the gaps, these daily gaps as well, unfinished business, and one of them is right in this intermediate demand zone with the 50-day weekly moving average. All right, guys, that's the recap on Google. Keep an eye on that earnings tomorrow because it could provide some volatility to the upside or the downside. But, those swings are like 10, 15% sometimes, and that is a lot for a stock with $4+ trillion market cap. All right, guys, enjoy the trading week. Keep an eye on those earnings and many successful future trades.